Today, the crypto world is abuzz with news of Bitcoin's latest price drop. This piece of news has been circulating widely across various digital platforms, and it's creating quite a stir among the investors and traders alike. Bitcoin, which was trading at around $65,000, has now dropped to a significantly lower value of $61,000, marking a considerable downturn in its market value. The Bitcoin is not the only one feeling this intense pressure. In fact, the whole cryptocurrency market is currently going through an unsettling phase of decline. This has resulted in a substantial number of cryptocurrencies experiencing hard-hitting losses. These losses are not minor by any means. They are in the region of 20% to a percent that would cripple any financial entity. For those who have their money invested in these cryptocurrencies, this is a nerve-wracking period. To give you a bit more context, in the past 24 hours, there has been an enormous volume of liquidation occurring on the market. The total value of these liquidations is over a staggering $700 million. These primarily long positions that were in play on the market. Long positions, for the uninitiated, are essentially bets that the price of a certain asset will rise. When these positions get liquidated, it signifies high volatility in the market. This volatility is a clear indicator of the turbulent times that the crypto world is currently experiencing. For investors, it's a nerve-wracking time, as over $700 million worth of longs have been liquidated in the past 24 hours, indicating high volatility. These fluctuations may seem alarming, but they're not uncommon in the crypto market. For those who are new to this domain, these rapid ups and downs can indeed be a source of worry. However, it is vital to remember that volatility is an inherent characteristic of cryptocurrencies. Thus, in the value of Bitcoin and other digital currencies are to be expected. Over their relatively short history, cryptocurrencies have witnessed numerous cycles of boom and bust. But what is consistent, especially in the case of Bitcoin, is their resilience and to bounce back. Past data patterns reveal that every significant dip is often followed by a period of recovery and even unprecedented growth. This phenomenon can be attributed to various factors. Firstly, the decentralized nature of cryptocurrencies makes them immune to factors that typically impact fiat currencies. Secondly, the blockchain technology underlying these digital currencies offers transparency and security, increasing their attractiveness to investors. Thirdly, the increasing acceptance of Bitcoin and other cryptocurrencies by businesses, governments, and individuals around the world contributes to their potential for growth. Yet, it's natural to feel uneasy during times of stark value drops or heightened volatility. What's required in such instances is to maintain a long-term perspective. It is crucial to remember that investing in cryptocurrencies, much like any other kind of investment, should never be about immediate returns. Rather, it should be considered a long-term financial strategy. Bitcoin, the pioneering cryptocurrency, has come a long way since its inception over a decade ago. Back then, it was a largely misunderstood and underappreciated concept. It has transformed into a globally acknowledged financial asset with immense potential. Just a few months ago, Bitcoin was trading at around $28,000. Today, even with the recent dip, it's still significantly higher. Furthermore, Bitcoin's adoption by institutional investors and mainstream acceptance continue to bolster its credibility as a store of value. Over the past few years, we've seen multinational corporations, hedge funds, endowments, and even governments warm up to the idea of incorporating Bitcoin into their investment portfolios. This increase in participation from traditional finance entities is a testament to Bitcoin's growing legitimacy. Despite the naysayers and skeptics, the intrinsic value of Bitcoin remains undeniable. It is decentralized, has a limited supply, and provides an impregnable shield against inflation. These key features make it an attractive asset class for those looking to safeguard their wealth. Being bullish on Bitcoin's long-term prospects, I can't help but see the current dip as an opportunity rather than a setback. When prices fall, they often present savvy investors with the chance to buy more at a lower cost. This is where the value investing occurs, not when prices are surging, but when they are falling. The intrinsic strength of Bitcoin remains robust, despite the short-term fluctuations we are witnessing. These fluctuations are but a blip in the grand scheme of things and do not detract from the underlying value proposition of the digital asset. In conclusion, while today's market dip may be unsettling, it's important to remember that volatility for the course in the world of crypto. As investors, we must build resilience and maintain a long-term outlook. It's not about weathering a single storm, but about being able to withstand many storms and emerging stronger after each one. Through patience and perseverance, investors can navigate the tumultuous waters of crypto investing and come out on top.